Hello, today is Thursday. It is another ugly day in the market. Got to be honest there. It is Thursday, February 27th, 2020. This is one of the ugliest weeks, one of the fastest dips from all-time highs throughout history. Um, Seems very extreme to me, to be honest with you. I'm not just saying that because I'm an investment advisor and I don't like to see losses. To be frank with you, we had about 50% in cash, not for every client, but collectively, higher risk clients. We did not have all 50% in there, but collectively across all assets, we did have 50% in cash. For many younger clients, we kept the gas on the pedal. It had some in cash because they're contributing monthly. But that is where we stand. Today was brutal, and we're going to go over that to kind of show, is this extreme? How extreme are we at this point? Is this, could this get worse? I'm going to give you a fair, balanced approach. I do think the selling is about over, but again, if we continually see increased numbers in the coronavirus, which could happen, could get a little bit worse, but this, to be honest with you, is pretty extreme. So let's take a look at the major indexes. This was the day. There were periods in the day that actually were not bad at all. Okay. So here's the day. I want to show you. Don't lose your mind when this happens. It's just to show you how extreme this actually is. Could it go lower? Yes. Have an open mind to that. The 1 week thus far, that is a very, very fast 1 week dip. Economically, we are seeing companies reduce guidance on their earnings for future earnings reports. And there's two ways to look at that, to say, oh, this is going to hurt the economy. Or you could also have the other approach saying they are basically giving themselves a option, the possibility of actually beating expectations to give a fair guidance and then still beat expectations, which often happens from corporations. Has the Fed changed anything with interest rates? Not yet, but we are seeing some crazy low interest rates, which is great for home buyers, refinancers. So it's ugly. This is not fun for anybody. I'm very thankful that we had a lot in cash. These are not fun for anybody, but if you had 50% in cash for many clients, a 12% or a 10% becomes a 5 to 6%. I'm not going to time it perfectly, but I do want to show you a few things that we are looking at. Here is, from a chart perspective, the S&P 500. This is how extreme it actually is. If you think I'm happy about this, no way. It's times like this where I'm like, man, I wish I would have been in all cash. I was not. I'm being real about that. I did not time any of this perfectly, but I am very thankful that I did raise cash at some greedy levels. Sure, in hindsight, I wish I would do more. But we have broken the 50-day moving average. I was surprised that we did not hold a little bit better around some of these levels, to be honest with you. But we tested higher. Here was the problem that I was seeing and why I'm saying I'm not adding quite yet at some of these levels. We would have a huge dip, and overnight we would trade higher, lose it all, trade higher overnight and lose it all again, trade higher again. Yesterday night, Wednesday night, was the first night where we had actually traded, and I was hoping that was the big dive that people were hoping for and would jump on board. There were periods throughout the day that actually did not look bad today. But toward the close, boy, did it get ugly. I was hoping we would hold the 200-day moving average, and for most of the day we did. This is a longer term 6-month period. I want to show you this because we haven't been here in a while. Usually readings under 30 mean we are oversold. That is just a fair perspective. Take it or leave it as you wish. This is why I'm adding some. I added some at 31.85. Again, I'm not invested necessarily in the S&P 500, usually individual companies. I also bought at 30.70 today. which I thought we were going to break out. We actually held, and I'm going to show that to you. I'm going to show you some of the price action more short term. It's kind of fun to see this, a different perspective. So this is the last 2 days. This is the gap down overnight, the big sell. We traded even lower, bought. There were some buys coming in, tested a little bit lower. This actually was good price action. And I was thinking, you know what? If we get to the 30.70 area, this actually could hold. And I bought at 30.70, and the rest of the day, it very quickly at the end of the day just dropped off like crazy, which is unfortunate. I want to be honest in saying that Friday is not going to, it could be ugly. But we are at levels where it is stupid for me to sell what I'm in. If you are the person that watches your account every year, once a year, this is not the time to watch. Okay? I'm watching very closely, but you will lose your mind when you have, I mean, I don't think we have had a 4% swing since December 2018, and I was up all night. Last night, I was basically up all night, really watching levels, looking to see, hey, what's my game plan? Again, in hindsight, we're going to likely be able to say, I'm glad that we added these levels, but was it timed perfectly? No. Again, we bought at 30.70. We added about 25% of the 50% we had in cash, and we still have about 25%. So not in a horrible position, but did we time it right perfectly? No, never will, ever. But I just wanted to give a realistic perspective there. The VIX, this is very important to show you how extreme this move is. December 18, 2018, when the Fed was saying they were going to increase interest rates and we had a 20% dip, the VIX surpassed that level. Again, 20% dip here. This is December 24th. I was up all night that day. It was not a fun night. Chose to buy, was the right decision. We are getting to extreme levels. I don't want to I don't think that the coronavirus is going to be as extreme as the market has depicted. However, price action is very concerning at this point. I want to be real about that. But usually on times like this, a 5-6% swing higher could happen very quickly. So if you sell here, that is not advised. I'll be honest in saying we are in a position where the positions that we have, we need to hold, and we will slowly likely add more cash in the next coming days if we trade lower. A day before the weekend where a coronavirus could scare more and more people and more cases, which probably will happen. It's just like the flu. It's probably going to happen. I'm not downplaying the issue here, but a 10 to 12% move in 5-6 days is also pretty extreme. So I want to give you a fair perspective there. And also, I had a client that I discussed today, and they were like, should I shift more to bonds in my 401k at this point? And I was like, many people are assuming that. However, you got to understand that bonds and gold were trickling higher with the S&P 500 when it was high. In short, look, that bonds are very overbought here. So I personally would not, you're too late to the game to change that. You got to suck it up at this point. You have to stay in my opinion. I think we could get a quick turnaround with any vaccine. This is not something you're going to get out of very quickly in the next 2 months. It's going to be slow grinds, which I do think the general trend will be higher, but it's going to be up 6, down 4, up 8, down 3. It wants something like that. That's kind of my expectation. I don't think this is going to be a 20% dip, but in the news, of course, you're going to hear, we're now in a correction. They love their titles. So wanted to give you a fair perspective. I want to see if I have anything else here. I think we gave a fair perspective there. One more thing. Again, this is a third party. I have nothing to do with this company. I don't necessarily agree with everything in here, but Bespoke is a fantastic company and they put great material out. But this is one of their trend analyzers to show many of the indexes or ETFs that many people follow. We went from overbought to oversold pretty significantly within 5 days. Guys, that's pretty extreme. I think this could turn around very quickly with any positive news, but tomorrow does concern me because people might not want to hold into the weekend. But people might also say, this is so extreme, I'm not going to miss out on this. It could be a day where nothing matters to the last 30 minutes of Friday. So we are here for you. We're watching closely. These are not fun times for anybody, but just want to give you a fair, balanced approach to see where we stand, what I'm thinking. And candidly, if you're sitting in cash in your bank account, you're going to thank yourself if you add this to the market likely very soon. Get it in the account. I will pick and choose when to get in. And in the next 3-4 months, you're probably going to thank me for it. A lot of people are not thanking me right now for adding at these levels. It's not fun. It's not fun from my perspective either. But I have to do these things. I have to do this from just a balanced approach to say these sell-offs are extreme for the reasoning. Could it get worse? Sure. But I have to add some here. Okay. So I appreciate you guys. Thanks for your trust. It's been one heck of a week. And we got one more day and looking forward to a weekend of some rest and more chart digging. So thanks again for your trust. And if you have any questions, reach out to us. Not fun. I get it, but we're here for you. Thanks again. Have a good day. Bye.